How's it going, everyone? It is Wednesday, May 15th, 2024, and this is the video for today. So let's take a look at the picks from the prior video. I gave FCX long as a day trade, and I gave Abbott short as a day trade. So we're going to take a look at that. We're going to see if we ended up entering or if we ended up doing nothing. Let's take a look at FCX first. And we're going to look at the price action on SPY yesterday and the price action on FCX yesterday. So when the video came out, I liked this grindy move higher in FCX. Wasn't really getting too ahead of itself. It would get a little bit high, pull back to the ADMA, get high, pull back to the ADMA. So this is where you'd want to get in on the trade. Here's where it changed, though. At 12, we got some nice stacked red candles consecutively on heavy volume. And it looks like that breakout was tested. Looks like sellers tried to test that breakout over here. So that's what I saw. It held the level. We got a higher low at 12.35. Managed to grind up higher on the day. So I didn't end up taking FCX because I was waiting for this 1OP bullish cross to come in later in the day, and I was waiting for the stock to see how the stock held up in the cycle. I had two entry points on the stock. The first would be pretty early in the day, around 10:20. That's when I'd take this trade, around 10:20 right here. If you entered here, you would have had time to at least scratch out of the trade, given that the stock had retraced pretty hard to VWAP. If you didn't get in at 10.20, you take a little bit of higher risk in these grinding stocks here as they came back down. We saw that with RTX 2 days ago as well. I'm going to put that chart up just for comparison. RTX, really nice steady grinder. You had to get in earlier in the day, right? That way when the stock comes down back in, you're able to scratch out of the trade on these kind of big, really deep reversals. This stock was trying to break out of some D1 support, and it looks like it really hasn't been recovering, even though the market has been soaring up higher. So FCX long ended up being a no trade. Let's take a look at Abbott short. So Abbott short yesterday, beautiful setup. The stock had broken through this downward, this low from the earnings, some horizontal resistance. We zoom into the M5 chart. This horizontal resistance came into play somewhere around here, if I were to draw that in. Stock chewed through that, and it just kept going down. Now, given that it was a LPTE sort of environment in SPY, I didn't expect this move to have a huge run like it did. I thought it would be more likely that this move would come back and retest this level that it broke on the D1, and then I'd have a really nice entry point to take a short later in the day. That didn't end up materializing. So your only chance to take Abbott is to really enter on this break pretty close once we confirm this low right here, maybe around 11:05. My friend took it around 11:10. And you'd have to ride this move all the way down until you start to see probably a bullish L RSI cross. That would indicate that the sign is changing around here, around 11:25. Right here, you got this. You see how we have these pop-ups that start off as a green bullish engulfing candle, and then they get smacked down to become a hammer. This tells us that the selling pressure is still good and the trend is still intact. And after these bars, we usually see a next leg lower very soon in about 2 or 3 or 4 candles. Here, this is your first clue to get out of the trade at 12.45. We get this move up here, which is still, it's a little bit bigger than all the other moves, but it's still not anything dangerous. We don't immediately smack it down. That tells us that sellers and profit takers, there's some profit taking happening here. We got another chance to test the low of the day, form a little bit of a hammer. So I'd exit at 11:10 if I was in this. But Abbott also ended up being a no trade. I just didn't get the opportunity I wanted to. I didn't quite want to front run it on a day where it was an LPT sort of day. If we had a bullish trend, then I'd be more likely to join in on this trend strength because I know I would have some extra tailwind coming in from the market. So both of these ended up being a no trade. There were trade opportunities in there, but by the time the video has come out, or where we're looking for something specific, it just didn't end up materializing in the way that we wanted it to. So 2 no trades, but that's okay. We want to be patient. We want to wait for our setups. Let's take a look at the market today. We have a breakout, a gap up, and a go to a new all-time high. SPY very close to that 530 level. CPI came out this morning, and it came in line. We had month over month expected was 0.3%. It came in exactly at that. Retail sales also came out. They were a little bit cooler. We had 0% actuals versus 0.4% expected. Retail sales are a gauge for consumption, and consumption has been one of the main drivers of GDP growth. So I think that is a story point in the bad news is good news camp. The market wants the rate cuts, so signs of economic weakness will put some pressure on the Fed to, maybe bring down the rates a little bit. They are still hawkish, so the market might be getting a little bit ahead of itself, but that is my interpretation of the news and then the corresponding price action. If we look at the after hours chart, you should always do this before you start the day and see what the reaction to the news is like. Here's the 8:30 news where we got both retail sales and CPI. CPI is a much bigger piece of the story here, and I thought it was strange that we had such a positive reaction to a number that was in line. If the number was far cooler, I thought that we would get this sort of move, but if it was in line, I didn't think it would change the story that much. But clearly it did, because I think expectations were probably more hotter because of the hot PPI number, and so because those expectations were probably met with a surprise to the downside, that gave us a strong response here to the CPI, a strong bullish response, I should say. Now, if we take a look at our longer-term fundamental bias, to me, nothing has really changed. CPI is still in line, right? It's not like it came insanely cooler. We know that in terms of the only dovish thing the Fed has done, it has reduced the rate of its quantitative tightening from its balance sheet runoff. So that's really the only bullish thing that they've done, but they're still going to be hawkish. They're still watching inflation. It's still been stubborn. It's been low, but this last leg from 3.5% to 2% is going to be pretty stubborn until we see some recession or some kind of soft patchiness in the economy that's going to bring prices down. Fundamentally, then, nothing is changing. I'm really going to be watching the GDP coming out at the end of this month. PCE deflator is going to be important as well. And also the next ISM services number. I really want that to come back into expansion territory. I think that's going to bode well for economic strength. I think a huge contraction or recession may have some bearish implications. So that's kind of what I'm watching for in terms of that. My long-term fundamental bias is still a 1 bullish, and I haven't quite changed it. Now, on a long-term tactical level, if we hold this breakout here, I continue to be a 2 bullish, because we've had this breakout to a new all-time high, and that's what I wanted to see. We weren't sure here if it was going to be a rejection, a double top, or a compression and a double top, but we have this breakout to the all-time high here. Now, we need to hold this breakout, and I'd love to see us close near the high of the day-to-day. That would be excellent, and that would give me a lot of confidence that bulls have control at this juncture. I don't think there's a ton of upside at this point. We may also see a test of this breakout, but I don't want to see a gap up and then a reversal like we saw on the 4th, or even a gap up and just sort of this hitter-patter move over here. I want to see something at least like this, where we gap up to the all-time high. This is NVIDIA earnings. We close near the high, come back in a little bit, come back to the 3 EMA here, and then we get the next launching off point. I'm okay with this sort of price action over here, or even if we see a breakout to this new all-time high, and then we kind of get this nice tiny body candles that drift up higher. That also tells us that bulls are in control. This is a nice opportunity to take some swing longs. If you're in some swing longs from here, you could have added on the breakout of 50 SMA, and we could also add on the breakout here, provided that it holds. I would wait a little bit. Here's what I do. You'd either add early in the day on this breakout, or you'd wait till the end of the day and add to the breakout. The reason we don't want to add in the middle of the day is because of this potential of an intraday reversal. We want to be really cautious about this point because we know that fundamentally things haven't been changing that much. So asset managers, if they're allocating money into here, they're allocating it on the long term. And if the CPI didn't materially change, why are they allocating so heavily? We don't know if this is going to be short covering from bears who are picking a top over here and getting squeezed out by the CPI number. I think we saw a little bit of that yesterday on the 14th, and we could be seeing some of that today. The clue is going to be the price action later in the day and the day tomorrow. If we actually get some follow through, it does tell us that, hey, this is not just a short covering. Asset managers are really allocating, and that's all we really need to know. I'm not going to play the analyst too much. I'm really just trying to use the fundamental analysis to try to get a sense of what asset managers might be thinking. But price action is going to be the real key, the real tell of where the money's going and where the trend is happening. Let's zoom in to just a 30-minute chart. I like to see how the action has been the past couple of days. You can see that we got this launch up higher last week. We compressed right below the all-time high, which is not bullish or bearish, but in terms of a bullish sense, it's good because we didn't give up any of the gains, and then we got that breakout to a new high. So that's what I'm seeing on a shorter term trend. M5, what's going on today? So we got this gap up from CPI, and we came back in here. There was some profit taking. We tested gap, and we held this level pretty quickly. So we got this short probe into the gap and a pretty strong reaction at 10. Your chance to get in on this level was right here on this bullish cross. You got these two bars, 1020, 1025, 1030, right? You have this area right here, this 20-minute zone, to get in on your day trades or get in on your swing longs. I missed that point. I missed that entry point. These gap and go days, they'll go up higher, and then they're going to start to stall out. We have a really nice production in this bullish cycle here, and everything was looking pretty good, I think, until we got this pop at 1105. So let me talk about why this pop is a little dangerous. We want a nice grind higher, and when we get this pop, it's most likely a buying climax. And we're not going to get a ton of movement here because we've already made a huge move overnight, and there's not going to be that much buying that is eager. We're going to see more profit taking that is eager. This move is just sort of an air pocket where there's just no supply. We hit this demand, and then we get the profit taking that's going to kind of come in on set here. We're moving a little bit too far away from the 8 EMA versus a nice steady grind higher, which sort of hugs the 8 EMA, comes back in, hugs it, comes back in. So if you missed this chunk of the move like I did, don't feel the FOMO. This is your chance to enter and ride up the cycle. You take some gains on your day trading shorts. We're going to watch the bear cycle here, see if it comes in, see if we get any sort of reversal. If we don't, here is your chance to find some intraday longs and find some nice swing longs that are going to hold up on any sort of move lower. If we get a nice little probe to VWAP, that's what I would have liked to see to get in some intraday longs. Get this little probe back to VWAP. Have some stocks that are maybe pulling back a little bit or holding the high of the day. That would be very, very bullish. And then we could have a nice late day trading long that might set up in, I don't know, maybe another 2 hours. I'd say an hour and a half. It's hard to tell how long these cycles are. This could be a bullish divergence. We'll have to see about the trend strength here, but I do think we're going to come in a little bit because we saw this selling pressure a little bit earlier in the day. So my current market bias is a 2 bullish. We know that tech is pretty strong for today. There is some sectors that are pretty weak. We're going to talk about our portfolio positions in just a second. Tech is pretty strong. Semis are pretty strong, leading the charge. Keep in mind for semis, there's AMAT earnings tomorrow. It shouldn't be a huge peer earnings mover, but if you're unsure, just check the past couple of earnings reactions on AMAT and see if your stock really moved to those earnings. Some of the stocks I recommended didn't really react to AMAT earnings, but you want to just double check on those peer earnings, make sure that they don't really move your stock too much. I think unless it's like a NVIDIA or an AMD, you should be fine on your semis. let's take a look at our portfolio and let's take a look at how we are going to play some of these positions. All right, so our first pick is going to be GE. Let's take a look at how our guy is doing here. And the answer is not too hot. So let's put up the D1 chart on SPY here. We took GE on the 7th. Here is SPY on the 7th. So this was a nice entry point. We got the market completely right. From the 7th, the market has rallied 10 bucks. From the 7th, GE has pulled back, and there's just a little bit too much selling pressure here. Now, it is holding the support level, which is nice, but the market has been soaring up higher, and I think it's been being carried by the market. As soon as the market goes down or pulls back a little bit, I don't think GE is going to do that well. See, let's look at GE on the days when the market has been doing good. So we took it on the 7th, 8th, 9th, 10th, 8th, 9th, right? Market soaring higher, GE is compressing. As soon as the market goes flat on the 10th and the 13th, GE falls. It falls hard. Market does pretty bullish on the next other 2 days. 14th, 15th, GE compressing, and it's flat. This stock should have made its move. Should have already made its move, and it should not have retraced this hard. Tells me that there's some selling pressure here. So how do we handle this? So this stock is relatively weak. We actually have an anti-edge if you think about it, because it's really going against us. So we could either close it for a loss now, knowing that the stock, if you think the market's going to come in a little bit, this is a good time to close it for a loss. The other thing is, if you think that the market is going to continue to drift higher, GE could find some support and start to make its next move back up on this pop. So those are 2 ways to play it. You can see if GE finds a relative strength, but at this point, we're not looking to get a winner. We're looking to get out at a good point on a loser. That's how we're trying to play GE. So it's pretty tough, but I think my current bias is to probably close it for a loss today. That's what I'm thinking. We're gonna really see how the day plays out. If the market is able to hold the gains, and start to drift up higher. But what I'm seeing right now in this price action is that, if I zoom out here, let's look at the M15 chart on GE. We have this support level here. It's being tested, it's being held, which is being good, but we should see a lot more strength coming from GE, and that is concerning to me. If the market's going so strong, we shouldn't be lingering at this support level for so long. Right, we really should be taking off and at least forming that double top. It really tells me that the selling pressure is pretty thick on this stock, and we got to adjust our expectations. So I'm going to be a little bit more conservative and try to be a step ahead of the stock. I think if the market pulls back, this support level is going to fall. So we're probably going to close GE today for a loss unless it can somehow close and get some green candle above its a VWAP E. If that can happen, then I'd be more inclined to stay in the stock, or maybe even exit then for a better loss. But if I don't see anything bullish happening today on GE, we're going to close it for a loss. Tesla. Interesting day for Tesla. Market gapped up, Tesla gapped up, smacked down very, very hard from this $180 level. Long red candles, heavy volume, compressing near the low of the day while the market is rallying. Pretty interesting. Oh, okay. Might be my pick. We're going to look at QCOM in a second. So certainly seems like there is some support or some resistance at this level. So let me redraw that line in there. A lot of kind of choppy resistance, little areas coming into play here for Tesla. And it's always good to make sure your D1's resistance is valid in some regard. So it looks like what really matters here could be that level, 174. That's some support. So if the market comes in a little bit, Tesla's going to come down. Again, we're going to try to take a better loss on this stock. So right now, we're still pretty down on this guy. if we can get through a little bit closer to the 50 SMA today, if the market comes back in a little bit, I think we could see Tesla challenge this 50 SMA, and we could probably take the loss there. So I'm still holding on to Tesla. Let's look at it from a cycles perspective. So we took it on this down cycle. It came back up, formed a nice bullish trend. We made a new low over here. So if we can make a lower high and then make a new low, we now know that the bearish cycle, or sorry, the trend is now in our favor in terms of a bearish trend. So this is the first sign of a potential trend reversal on the past couple of days. So we're still going to stay in Tesla. Let's take a look at Levi. So market has soared up higher. Levi, it's grinding, it's doing its own thing. Not a fan of this bearish candle over here. Not a big fan of this bearish candle. It looks like there's simply just some support at this level. It is holding the breakout, which I like, but it hasn't really been producing. So for me with Levi, I'm probably going to look to take a small win on this stock and just swap out into better trades. I don't think the market can still go higher after this, obviously, and we could drift up higher. But if Levi's not reacting to this sort of strength, I want to get in stocks that are really in the strongest, the strongest stocks kind of in this race. So we got it over here. We can probably exit for a small scratch. We got the market right. If you look at the market from May 9th to today, we got the market completely right. Levi is not producing, and we gave it a couple of days to really get something going. This day was fine. This candle is not okay on a day when the market caps up. We needed to have some cushion, and we didn't have that cushion. So gonna look to probably scratch out of Levi today. And we'll just have Tesla short. So what do we do here? We have GE didn't produce, Levi didn't produce. Well, what stocks are doing pretty well? Let's take a look at some of the stocks that I liked earlier today. A couple ones that caught my eye. First one here, SMCI is doing excellent. You had a nice opportunity to enter this stock here right around 1020, 1025 on that bullish one of P-Cross and really ride that guy up higher. SMCI may not work for an overnight swing. We have this high here around 910 from the earnings, so that may come into play, as well as the 50 SMA. So you had to get in this stock early to ride it up. It could break through this level, so if it breaks through the 50 SMA, be on it and set an alert on that. So we kind of missed our opportunity in SMCI, but it could still set up again tomorrow. Hope you guys are enjoying the Bossa Nova music, by the way. Thought I would switch it up. Let's go to one of the alerts that triggered. Dell is going to be one I really like as well. Is going to be, oh my gosh, really liking QCOM here. This stock is going parabolic. So, a couple things on QCOM. One, really responding very nicely to the market. The chip sector is strong. NVIDIA earnings is coming out next week, so we don't want to overstay our welcome in chip stocks. Let's look at why I draw these lines. Where are these lines coming from? These lines are from the prior all-time high all the way back from 2021, 2022, before we got that bear market. So QCOM is breaking through that, pretty good volume, and that's kind of the what I was watching for here in the stock. I really wanted to have it test this level and break up through there. So if QCOM, if we look over here, so here is the all-time high at, where was this low here? 193.58 is the all-time high. If we hold this level, we break through and we start to get some relative strength on this stock, QCOM is going to be a pretty nice swing. Now, for QCOM, because it's parabolic, you have to be careful on how it moves. When this stock goes parabolic, you can't wait for it to pull back and form that double top. You got to exit on sort of this bearish hammer or bearish engulf at the top, at the high of the day. So here, let's take a look at a couple examples here. This stock is looking nice, starts to go parabolic, holds a little bit, and then it starts to pull back in here, right? Still moving up higher. And you'd have to get out of the trade over here. This stock gets parabolic here. You can get out here at the bearish hammer on the 24th or the bearish engulf on the 25th. Stock goes parabolic again. Nice hammer over here, bearish engulf on the 8th. This doesn't get it all the way, so you could exit for a little double top here, but certainly get out of the trade here. And now it's gone parabolic again. Now, is there any news driving this move? There's usually really heavy volume on these parabolic stocks, but as far as I can tell, it looks like there's just a lot of buying into chip stocks. So nothing crazy, but there is some long-term money coming in here. So I like QCOM as a parabolic swing. Just be careful. Don't get a crazy size on this kind of guy. Other stock I like a lot is Dell. Dell has been a nice, steady grinder today. Really excellent volume. And let's go to the D1 chart here. Huge breakout, and especially we're holding above this high plus trend line coming all the way back in from earnings. Now, the key for Dell is that we want us to close above this line. Past couple of times we poked through it and then we came back below. So if we don't really close through it or don't really close above it convincingly, like we're barely above it, not as crazy about Dell. Let's take a look at a couple of other stocks that could be of interest. BX is pretty nice today. Bit of a choppier stock. Makes moves and then it can retrace, so not my favorite pick, but certainly not bad. WDC breaking out of compression. Not relatively strong though, so we don't know if it's just getting lifted from the market or not. We'll take a look at HPQ. HPQ has been really nice. Same thing with Dell, so these are kind of in the same industry, breaking through a lot of this compression. This stock has certainly gone parabolic, but looks like it's giving back a little bit of the gains over here. Not really rallying with the market, so there is certainly some profit taking over here. Goldman Sachs has been a beautiful pick, one of the best picks you could have had in this market. Slowly grinding up higher. Already made a really big move, so we just want to be riding this trend here a little bit. Compressed here and made this next leg higher. Certainly could work, I think, for a CDS. We're going to watch how this stock does when it comes in. UNH is one that I liked earlier today, but it's given back some of the gains. Not as high volume. We have this high minus trend line coming into play here as well. So a couple of picks that I'm showing that I like, but my top picks is going to be QCOM long, if it can hold above and close above its all-time high, and Dell long, if it can close above this high minus trend line coming to play around 143. So those are going to be our two picks. Let's add them to our YouTube picks. And we'll see if we had these criteria to enter. Now, we don't want to be gangbusters, go, go, go bull at this juncture, because this could be the last leg of the rally when we make the new all-time high. We have to be careful and see and make sure that this isn't a short covering bounce. We want to take some strong stocks, and I'm really going to treat this as more of a swing scalp at this level. Not going to get too ahead of itself. If we can get a nice 1 ATR move in the stock, then we're going to take our gains. If we see the market give up all the gains today, we shouldn't be really entering these trades if we see sort of a bearish candle like this. So although there's a lot of breakouts today, there's a lot of strong market action, be careful and don't get too ahead of itself. This could be the last leg of the rally. We don't know yet. I'm not trying to predict when the top is going to happen. I'm just trying to say the warning signs of when this move gets exhausted. If we see some tiny bodied candles and we get a little bit ahead of ourselves on that stage. So those are your two picks for today. We're going to take a look tomorrow. If you want a bonus pick, by the way, I like the Riley earnings time spread. This is a really nice earning time spread today. So that's a little bonus pick for you. We'll take a look at how these stocks did, if they entered or if they didn't enter. If you didn't get in, don't worry about it. You can still try to day trade the long side, try to get in some excellent opportunities over there. Apple, there's a lot of stocks that are testing these downward sloping high minus trend lines. Some of them breached, some of them have not breached. So keep an eye on those and just don't get too excited. Right, we want to be aggressive when we need to, but we also don't want to be overconfident when we don't need to. Keep an eye on this pullback here. Let's watch this bearish cycle. Let's see what happens, and then pick the best stocks, pick excellent entry points, do everything you need to do to take the best quality picks in this scenario. Thanks for watching, everyone. We're gonna take a look at if these two picks end up being good, or if we took them tomorrow, and I'll catch you all in the next video.